You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everyone. Welcome back to the Infinite Banking Mastery Podcast. As always, I'm so glad you're here. Today, I wanted to talk about the importance of the child rider on your policy, whether it's a whole life policy or a term insurance policy. Now, of course, if you have a desire or you would rather open a separate individual policy for your children, that's even better. That's going to be great. I would highly suggest, if you're able to, and it makes sense with your budget and your overall plan, to, go ahead and open a separate policy on each of your children. There is one thing, you would have to open it on each of the children because the underwriters do look for making sure there's equality with the children. So they wouldn't want you to be opening a policy for only one of 3 children or something like that. They don't want to see any favoritism. They don't want to see anything that they think is odd. Why are you only covering one child? So you would have to cover all of the children. And also, once the children are over 26, you're going to have a hard time buying and owning a policy on them outright. Now, you may still be able to acquire the policy, have the child sign as the insured and the owner, and then later on, once it's enforced, you can become the owner on that policy, usually with no problems. So that is a way for you to own the policy, and if your child is over the age of 26. So yes, great idea. If you want to have a whole life policies individually on each of your children or your child, that's great. It's going to build up that cash. There are many benefits to it. You can, of course, have that policy be allocated for their college needs, first car, maybe their wedding or their first home. And then, of course, it will continue to build up with cash as they find reasons and you find reasons to use that cash and make it useful for them in their younger years for whatever it is that they might need. So it is great for that. And then, of course, they'll have that pool of cash again in retirement that they can use and access income tax free. But if for some reason you're not able to start that policy on your children just yet, it just doesn't make sense with your budget, or you're not ready to do something like that, it is a good idea to tack on a child rider onto your policy. It's not very much, and that one rider will cover up to 6 children. And so I thought it would be important to express just how important really the child rider is for the purposes of, well, let's look at the bright side first. So of course, having this coverage, it would cover your children up to $25,000 each for each child. And then the exciting thing, because we don't want to look at the tragic side of it, the exciting way to look at it is, great, well, now my child is covered. So if for some reason something were to happen that caused them to become uninsurable, they already have a policy in place and that they can convert when they are age 25. So they'd be able to have that term rider as a part of your policy. It wouldn't be growing any cash or anything. It would be kind of like a term insurance policy. And then when they turn 25, they have about a month to convert that policy, and they can convert it all the way up to $125,000 of coverage. So if something were to happen along the way and they were to become uninsurable for some reason, they would still be able to convert that term rider into a single standalone individual policy for themselves that they could fund, or you could fund or help them fund, and be able to at least have their own whole life policy that they can build and grow and use over their lifetime. Now, of course, there's also the other side, and the other side of what's so important about having this child rider on a policy is because sometimes a tragedy does happen. Now, of course, we never want to think about that. It's very sad to think about that. We all, of course, hope that there would be no reason to need the death benefit on a child rider policy or for a child at all in any way. But of course, sometimes it happens. And so I just wanted to share a couple stories of people that were close to me, a family member actually, whose son, he was out driving around. He was, as far as I know, a pretty good driver. He just had broken up with his girlfriend. And so he was driving past her house and he looked back over his shoulder. And apparently, and I'm sure he knows this road. He's been there before many times, but something happened where he lost control of his car. Maybe he was going too fast or something, but he slid and ran into a giant boulder and passed away at age 16. So terrible, such a tragedy. Just, it was a huge sadness. I mean, what could be worse than losing your child? Nothing. And so our family, I went through this difficult time about that. And of course, the person who was the parent was devastated. And now she's got to come up with funds to bury her child. And it's just the saddest thing and the last thing you ever want to have to come up with money for. In such a time of despair and sadness, it's good to have that there to help fund something so you don't have to worry about where am I going to get these resources from. And I mean, there's no worse reason to need a large sum of money for something like that. The last thing you want to be doing is figuring out how you're going to pay for it. I have a client who just recently lost their child as well, who was an older person. Just so devastating though. And as far as I know, that person did not have any life insurance. They were an adult already. But I know that's just a devastating time, and it's just so important to have that coverage. I have a story of another very dear friend who lost her son a few years back. He was shot, and I mean, it's just so terrible. And he was shot, and it's been devastating for years. And he was such a great kid, so loving and wonderful. It was truly a shock to us all. And in that moment, I was so devastated for her and sad for her. And at the same time, so thankful that we did have that child writer in place for their family so that they could use it for funeral expenses if they needed it for that, or do anything else that they wanted, do something in his name, maybe a scholarship or something like that. They just had options. And she has another child who is still covered by that writer. And that child would have the opportunity to take advantage of starting her own policy at 5 times the amount of death benefit, up to $125,000, and begin her own policy, her own account to build wealth, to be able to use to finance things, to kind of give her a jump start on her future as well. So, and that's always the side we want to look at. Of course, we don't want to look at the devastation and the tragedy and the things that could happen. So there is a really great reason to have this writer if you're not able to start a full policy on your child. But there is sometimes it happens, and there's nothing more devastating and even worse having to wonder where you're going to get the resources from in that time. Now, it does take a few extra steps. If you do decide to add a child writer to a policy, we will need to get medical questions for each child. Oftentimes, the underwriter will request medical records for each child. Sometimes they don't, but sometimes they do. And they're not required to do any kind of medical, like lab work or anything like that, but they will sometimes ask for medical records, and we will need to complete health questionnaires and things like that. So it adds some extra steps. It might take the process a little bit longer, but I do feel that it is very important if you're able to add that on. One thing I wanted to add about when I first mentioned having an individual whole life policy on the child or acquiring one for your child, if you're wanting to use that for something like college or their first car or braces or whatever they might need, it is a good way to keep better track of the accounting for the stuff you spend those funds on for your child. So if you have your policy and you're running real estate transactions and using that policy for banking for that purpose, but you want to also have separate funds for your child to used for school or used for braces or used for a car or a wedding or something, you can keep the accounting separate. Now, of course, if the policy for your child is much smaller and you need to dip into yours, of course, that's a possibility and it's fine and all of that's no problem. But it does help for those little instances just to help you keep better track of your policies and what's going on and what you owe your policies and what you're paying yourself back on those. It just helps it to be a little more clear when you separate them out for your own tracking, for your own accounting. And then, of course, when your child grows up, if you want to turn that policy over to them, you can. You can make them the owner of the policy. If you want them, you feel they're responsible enough to take care of it and to fund it, to pay it back, to pay the premium, then you can turn over ownership of that policy to the child when you feel that they are ready. Of course, on the other side, you also don't have to turn it over to them. You can keep it and be the owner of it, and you can turn it over when you're much older or not at all. And then when you pass away, it would automatically go to that insured person, unless, of course, you have a second owner written down, but it would usually automatically go to the insured child, and they would automatically become the owner of that policy. Also, I do have clients sometimes who are unsure, who don't have maybe a ton of resources and are unsure if they should start a policy on their child or themselves. They're not sure who they should write the policy on. I will say usually it's best to start with yourself. Of course, it would depend on your situation and your budget and what your plans are, but most often it's best to start with a parent. And keep in mind that, yes, it will be, if you start a policy on them, yes, you'll be able to gift that to them and everything. And they'll have that money that you put in, or the cash value growth that's happened inside. But also, if you have a policy on yourself, they're going to end up with that windfall, that legacy, which is likely to be more money than whatever you'll build up inside of their cash value, inside of their own policy. Well, that's all I have for you today. Sorry for those few minutes that were a bit of a downer. I just wanted to make sure I express the importance of the child writer. If that's something you're debating on or didn't even know it existed, you could look into and see if that's something that could be added to your policy. I just feel it's so important with the life experiences I've had and family and friends that I know. It's just so important. So please feel free to reach out if you'd like to work together, look into a plan for you or a loved one. You can reach me at Valerie@alphaomegawealth.com. I hope you have a great week. I'll talk to you next time.
This is thepodcastfactory.com.